to you, Jeff.
Thanks, Bobby. And as folks can see, the last several years of working on certification, not to mention two teenage daughters, has changed my so a lot more gray hairs. Thank you, Bobby, for this opportunity to talk about our new certification application and new standards, really, for certifying entities that want to be recognized as a community development financial institution. I don't know if there's a sense, or if I can get a quick sense, just are most participants on this call already CDFIs, or is it a mixture of those that are CDFIs and those that are interested in becoming CDFIs?
Just raise a little hand if you're CDFI certified currently. I think it's a pretty good mix there, Jeff.
Okay, so great. I just want to get a sense of, how much background I should provide. But let's go ahead and move ahead with the slides, and I can start talking about certification. So just before I actually dive fully into these slides, a little bit of background as to the reason that we undertook to update our application and the certification standards. So as folks may know, the CDFI fund was created through the Regal Act in 1994, and the first CDFIs were certified in 1996. That time there was about 196 CDFIs that we had certified. Today there are over 1,400.
Well, and if they're doing their job, they're saying, "Hey, what about the website too?" So,
hi, somebody may want to mute themselves. So, a lot has changed since the certification application and standards were first created in 1994. 1996, first CDFI
no
certified.
apology is necessary, I can assure you. So,
can we all go ahead and mute ourselves, please?
Oh. Adventures on Zoom. So a lot has changed in the last 3 decades, really. So as I mentioned, there are a lot more CDFIs now. The meaning of certification has changed. So initially, certification was really just a gateway to resources provided by the CDFI fund, primarily our financial assistance and technical assistance awards. Today, it allows access to a host of other resources outside of the CDFI fund's purview, federal resources, private resources, local resources, other banks, non-CDFI banks. A lot of other entities will provide resources and support to CDFIs. And CDFI certification has become sort of a brand in and of itself. It gets treated as a good housekeeping seal of approval, even though, as I noted, that was not how it was initially designed. It was just meant to say whether you qualified for applying for our resources or not. In addition, the financing world has changed in that time. So, for example, the advent of financial technology and fintech tools to provide financial products to potential borrowers all around the United States, regardless of the location of a lender. And so that was not something that was initially envisioned back when CDFI certification was created. And so we really wanted to accomplish a couple of things, or several things really, as part of the update of certification. And one of the main things was, in some ways, kind of protecting the brand of CDFIs. So as some folks can imagine, there are other lenders out there that, may be less scrupulous than the folks on this call and most CDFIs that are serving some of the same target markets, targeting vulnerable populations, and that we wanted to make sure those groups were not eligible for CDFI certification. We also wanted to provide more flexibility in where we could. So on the one hand, we wanted to strengthen the certification. On the other hand, we also wanted to provide flexibility for CDFIs to be able to take advantage of things like financial technology and to recognize the growing scale and scope of the services provided by many CDFIs. So those were some of the goals that we undertook. We wanted to, keep it as non-burdensome as possible, both for potential applicants as well as for CDFI fund reviewers. And we wanted to maintain the diversity of CDFI types. So whether they be credit unions, banks, loan funds, or venture capital funds. So that was a lot of what went into our review of the application and our standards, and where we tried to keep things going as we made changes. So let me jump into the different sections of the application, which are really designed to test an applicant's compliance to the statutory and regulatory criteria for CDFI certification. One thing that is not a criteria, but an opportunity for flexibility that we added to the application is this first item, eligibility determinations. So in the past, we had an application that would ask certain questions about the different criteria. And there may be something that an applicant was doing or wanted to do that didn't quite fit into the standards as we had designed them. And there was no real way to find out beforehand, before completing an application, whether that would qualify or whether it might end up disqualifying the applicant from certification. And instead, they would fill out a complete application, and then there might be some back and forth with the applicant to make a determination. Now what we've done is added a section up front before an applicant even completes the application for them to identify certain activities that they may be engaged in, or certain approaches that they would like to take, and basically submit that information to us before they have to go through the full burden of completing the application. And they're able to get a determination as to whether on that specific item that would be treated as eligible or not for purposes of CDFI certification. I think for the credit unions that are on this call, what is most relevant is that they can ask about, whether there are certain responsible financing practices or activities in which they engage that do not appear to meet our standards for certification. I don't actually expect this to be a problem for most credit unions, but that would be one area where an applicant could submit a request to amend our standards for responsible financing practices, and would be able to demonstrate to us that the activity in which they want to engage can be done responsibly. And this isn't something that we would be doing on a case-by-case basis. We would take the information that is provided by that applicant, and if we agree and we decide to amend our standards, we would then make that available to all current CDFIs as well as future applicants. So, applicants can also request to serve a different target market, targeted population than one of the ones we have listed as pre-approved. They can seek to use a different target market assessment methodology to demonstrate that they are serving the population that they have identified, different than one of the assessment methodologies that we have already pre-approved. So that's that first section of the application before you even fill out the application, and hopefully that will ease some burden for applicants. The next section, and really the first section of the actual application, is to collect basic information about an applicant. And this is not information that is used to make a determination, but just helps provide information that may be used in other parts of the application and to give us a sense of who our applicants are. Not much new, and about the financial products and financial services that they provide, just very broadly. Not much new about this section. The main thing that is new here is that for the first time, we are collecting demographic data, race, ethnicity, gender of an applicant's governing board, as well as their executive leadership. This is not information that will be used to make any kind of determination. It again is just there for purely information sake and to give us a better picture of who our CDFIs are, who they're representing. But again, not something that will be used to make any kind of determination as to eligibility. A CDFI also has to be a legal entity. So this is a pretty basic standard. I think all credit unions, certainly federally insured and state insured credit unions, will meet this test. But the way that we are making this determination is a different change. And this was something that a change we made in response to a lot of comments that we received from applicants, from credit unions rather. And that was, in the past, we used to collect all sorts of legal documentation, original bylaws, and I know for a lot of credit unions that are very old, some of this was difficult. Now what we're doing is an applicant is required to register with sam.gov, which is run out of a separate federal agency. But this is something that most entities that want to apply for federal resources have to do anyway. And so we realize that we can rely on the work that they've already done to make our determination. And so hopefully, again, this will streamline the process for applicants so that they don't have to provide us with additional documentation. So now we start getting into the heart of the application with the primary mission test. And this is the test to determine whether or not an applicant has a primary mission of promoting community development. And this is a statutory and regulatory requirement. So in the past, this test was basically just a test of whether or not the applicant included in its mission statement indications that its mission was to promote community development. And it was a pretty basic test. Some of the most significant changes to the application are in this section. We really wanted to strengthen that primary mission test to make sure that not just that there was a stated mission of community development, but that the practices and the financial products and financial services of that applicant were consistent with their stated community development mission. So, as I mentioned earlier, there may be financing entities that really, they may say that they're serving low income and minority populations and promoting community development, but when you take a closer look at the actual products that they're providing, they may be more extractive from the community than helping to provide community development. So some of the things that there is still that mission test in the sense of we want to see your mission statement and see how that demonstrates a primary mission of community development. But we've also added a couple of additional tests to that. There is a community development strategy test where we want to see if you've got a strategic plan. You can submit that to us and just point us to how sections where it demonstrates community development intent, or you can provide, if you don't have a strategic plan that has been approved by your board, you can submit a narrative that is approved by your board that shows what your community development strategy is. And then significantly, we have also added a series of tests about the financing practices of the applicant. So we call this our responsible financing practices test. And we have a number of listed standards in the application. I won't go through all of them here, but basically we're asking some high-level questions about the nature of the applicant's financial products, financial services, and other financing-related practices, and asking whether, to see that those are consistent with a community development mission. And I'm sure there'll be some questions about this, and I can answer those later, but just as some examples, we want to see that an applicant is considering a borrower's ability to repay any financial product for their mortgages or other consumer financial products, as well as small business products. We have questions about the rates provided, or if there are any limits on rates provided for consumer loans or small business loans. We ask a series of questions about mortgages that are provided to borrowers. And also we have questions for depository institutions that are related to their depository accounts, in some cases about the characteristics of some of those accounts, as well as about any fees that are charged in relation to those. Some of these questions are what we call bright line questions. So it's sort of an in or out type of question. Either you meet the standard or you don't. But a number of the questions, including those related to financial services and depository accounts, provide additional flexibilities. And while we ask certain questions about those practices, if we do give applicants opportunities to, explain how any of those practices are consistent with a community development mission. And we can talk more about that later if there's additional questions. We go to the next slide, please. Right. So I won't spend any time on the financing entity test. This is something that all credit unions are de facto considered to be. There's if you are a federally insured or state insured credit union, you are automatically deemed to meet this test. The target market test, on the other hand, is where we look to see that you are serving one or more of our target markets. And so those can be in a geographic investment area, low income or high poverty investment area. It can be a targeted population. So that includes low income targeted populations, as well as certain other targeted populations that have historically lacked access to capital. Some of the pre-qualified targeted populations include African Americans, Hispanics, Native populations. We recently also Pacific Islanders as well. And we recently added persons with disabilities, as well as Vietnamese and Filipino populations. So we are looking here to see that an applicant directs at least 60% of its total financial products activity to one or more targeted populations. And it is important to note that an applicant can serve more than one target market, and combined, all of that activity has to be at least 60%. Applicants, one of the things that is new about this section in the past, we collected this information in the aggregate. All applicants now are required to provide a transaction level report, which does give us a little more data on the activity of the applicant and allows us to verify more easily that the applicant truly is serving the populations and geographies that they say they're serving. And in the past, hopefully this is something that will, another change that we made that I hope will make things easier on applicants, is in the past we used to ask, how would you assess that you are serving populations or geographies that you are serving? And applicants would have to, provide us a narrative and describe their methodology. And basically we would go back and forth and either approve what they were doing or, have them make changes and, or deny that approach. Now what we've done is we've published a list of pre-approved target market assessment methodologies. So that is the assessment methodologies that an applicant can use to demonstrate that they are serving a target market. And all they have to do is select which ones they are using. And as long as they use any of those, they will meet our requirements. So the CDFIs also have to provide development services to the populations and geographies that they serve, and these have to be in connection with their financial products. So it can also be financial education if it is related to the promotion of, the creation of a checking or savings account or promotion of additional savings. But this typically is, technical assistance, whether it can be for small businesses or for consumers, but a applicant has to demonstrate that they are providing at least one development service in connection to their financial products. Accountability, another major piece of being a CDFI is to demonstrate accountability to the target markets that the applicant is serving. And that typically means board representation. So it can be through the governing board or in some cases through an advisory board. And, having representation of those target markets on your governing or advisory board. For a governing board, if at least a third of your governing board are representative of the target markets that you serve, and we have a list of ways that can be demonstrated, then that's acceptable. And so one option that is available specifically for credit unions to recognize that, the members of the credit union may be members of the target market is that if the credit union applicant can demonstrate that at least a third of its credit union members are members of one or of their target markets, then they can have just an advisory board meet the accountability requirements through an advisory board and representation on that advisory board. Finally, a CDFI is not a CDFI that is a government entity or controlled by a government entity is not eligible for CDFI certification. So there's a basic test just to verify that. And then any CDFI that wants to be recognized also with a Native American CDFI designation is able to apply for that as part of the revised application. And there's a little bit of change here. In the past, the requirement to be designated as a Native American CDFI was only to demonstrate that you were, or actually just a test that you were delivering at least 50% of your financing activity to one or more Native communities. Now, that information will be submitted as part of the transaction level report, so we'll verify it that way. But also there is a new accountability requirement, associated with being a Native American CDFI. So demonstrating that your board, similar to the accountability requirements, that you have sufficient Native representation on your governing and or advisory boards. So that really is sort of the quick version of the updated standards for CDFI certification and the new application. Have a much longer and more detailed version of this presentation on our website that you can go to at cdfifund.org. And if you want to watch that full presentation and get some more detail, there are also a lot of other resources on our website providing guidance to the new application. And we have a set of FAQs that are up. We are in the process of updating that to include, additional FAQs that we have been receiving. And so a lot of resources, and we will continue to update that. And as you can see on the slide here, you can also direct questions to the CDFI fund if they are related to the application. You can send those to via an AMIS service request or by email. And same thing with the transaction level report or your annual certification report. So they will go to different parts of the CDFI fund, but going through AMIS is our preferred way of responding to your questions. That way we have a system we can track those requests. And you're more likely to get an answer more quickly. I will note that this is a new application for us as well. And so there's a lot that we are learning in the process. And I know there may be frustration experienced at times by potential applicants and current CDFIs. I would ask your patience with us as well, because like I said, we are learning as we go along here. There's anybody who has been through this kind of exercise will know that, you try to project all the issues and address all of those issues beforehand, and inevitably there's something you've missed and somebody asks a question that you didn't think about, and so we have to figure some of that out. So sometimes we are taking longer than we would like to respond to questions. Don't hesitate to follow up with us if you haven't heard from us in a reasonable time. But I do ask your patience with us. I see Bobby has put up here also a revised submission deadline for current CDFIs to reapply for certification under the new standards. So our application process is currently open to any entity that is not already certified as a CDFI. So if you are a credit union that is interested in becoming a CDFI, the application process is open to you. For credit unions that are already certified, that have a current certification, and intend on reapplying under the new standards, we are providing a grace period. And what's up here is the schedule for that grace period. We initially had set that grace period where we were requesting that all currently certified CDFIs reapply by the end of this calendar year. And we got a lot of feedback and recognized that we needed to adjust a little bit. And we're providing additional grace periods. So based on a CDFI's fiscal year end, and you can see the schedule, there is a different due date essentially for applicants or for CDFIs to resubmit their application. One important thing to note is that during this grace period, you will retain your CDFI certification. The only way you would really lose that certification is if you did not submit one of the required reports, like your annual certification report. So you still do need to meet the the reporting requirements, but we're not dinging you on if you aren't meeting our current standards yet through the grace period. Once you have applied for certification under the new standards, you also will retain your certification until we make a decision or make a determination. So, whether we're able to make that determination in 30 days, 60 days, 90 days, or something more, until you hear differently from us, you will remain a certified CDFI. Let me stop there and turn it back over to you, Bobby.
Yeah, thanks, Jeff. I appreciate the overview of the application and some of the new guidelines you have in place, and also for extending that deadline for reapplication. I think that will help a lot of our credit unions get their ducks in a row and get in order to reapply. At this time, I think we are going to open the floor for any questions to Jeff about any of the information he's just gone over, any thoughts that you guys have. Just go ahead and you can put those in the chat, or you can just ask Jeff the question directly. So there's one in the chat that says, Jeff, are you saying that while the CDFI fund will review the board's composition, it won't be a deciding factor for certification?
Only what I was talking about in that context was regarding the demographic information that we collect in the basic information section of the application. So where we're basically asking some questions about the racial and ethnic and gender composition of your governing board, of your chief executive officer or executive director, and other members of your executive leadership. So that part is not a consideration in the certification determination. Where your board composition is a factor is in terms of providing accountability to your selected target market components. So for example, while the information that you provide about the demographics of the applicant in the basic information section, it does not matter how many members of a certain population are part of your board. When it comes to accountability, for example, if you are saying that if you have selected to serve a targeted population of African Americans, then there are board composition requirements, either governing board or advisory board requirements, that you have a certain meet a certain threshold of members that are members of that targeted population. So doesn't matter for basic information. We're not using that information to make a determination. If you have 0 African Americans on your governing board, that is not a disqualifier unless you are saying we want to serve a targeted population and receive credit for serving a targeted population of African Americans, in which case either on your governing board or your advisory board, you would need to demonstrate that you had African American representation. So hopefully that clears that up, but feel free to follow up if that wasn't clear.
Yeah, another question came through the chat. as a CDFI reapplying, if we have an interest-only HELOC product, does that disqualify them?
We will be issuing some additional guidance on HELOCs. It hasn't been publicly announced yet, so I don't want to put that out there yet. But what I will note is that I think the questioner is referring to one of our responsible financing practicing standards as they relate to mortgage lending. I think if a HELOC is a secondary loan, it has the second lien subordinate. Sorry, was the term I was looking for. Then that is not one of the questions that we're asking about. There are questions about primary or non-subordinate loans that are interest only, but we'll be issuing some additional guidance on that.
There's another question in chat, but before I read on that, is there anybody that wants to come off mute and ask a question before I manipulate all the time? Okay, well, in the chat, it says, we have heard that fee income may be an aspect of recertifying. Is that true? And if so, what are the guidelines on fees?
So the application does ask certain questions about any overdraft or non-sufficient funds fees that an account holder may be subject to, and about the policies of the financial institution, the bank or the credit union. And so these are, what I mentioned before is we have certain questions that are bright line questions and certain questions that allow for additional narrative. These are not bright line questions. These are questions where we ask about if you do charge overdraft fees, if a customer can be charged overdraft fees, whether there are any limits on those fees. And if you exceed certain thresholds, then we would ask the question, tell us more about your practices as they relate to overdraft fees or non-sufficient fees, and how that's consistent with a community development mission. Again, this is not a automatically disqualifying question. I think what we are looking for here, and again, we will be providing additional guidance on how applicants can answer these questions. But we want to see have an applicant describe how it mitigates the risks to account holders associated with either automated overdraft payment programs or non-sufficient fund fees, and any meaningful or effective action it takes to limit the use or incurrence of those fees by the customer. So if you are providing financial education for customers that have been incurring high levels of fees, or if different ways that you may work with those customers to make sure that they are not relying too heavily on those fees, for example, overdraft fees, that they're not relying on overdraft fees as a form of short-term borrowing. We want to see that the credit union is working to not extract wealth from its customers, but really to help support those customers. So that's the sort of information that we'll be looking for. Again, it is not a automatically disqualifying question, and we will be putting out some additional guidance on that. As far as the time frame for that guidance, I will just say soon. And again, if anybody on this call has ever worked in government, sometimes things take us a little longer to get through clearance than we might like. But we will be releasing guidance well before you need to reapply.
Thank you. All right. Any other questions or thoughts for Jeff? Okay, well, I am going to thank Jeff for being here today and providing that overview for us and being available to answer some questions. I think it helps as we try to navigate the application process and the new application, and we all are kind of getting through it together. So I appreciate your time today. And I do want to provide a little bit of an announcement. So based on the new application and having everybody have to go through and reapply that wants to reapply, the foundation will be reopening our community impact grant, specifically around the funding priority of helping our credit unions wanting to be CDFI funded, helping them with some grant opportunities to be able to afford that third party that usually gets hired when you're trying to go through that application process. So that will open today, and it will remain open till September for this year, 2024, and then of course it will reopen again in 2025 for its original cycle. So if you're interested in applying for those grants, go ahead. There's a link here. I will also send out the meeting notes or the meeting recording and these slides and a link to that grant opportunity for those that would like to take advantage of it. And if you have any other questions or any other thoughts about the grant or anything I can help you with, you guys have my information. I'm always here to help and support you as you kind of navigate this process. So anything else, I can give you back 15 minutes in your day, and we can say that we are a little bit more educated and going to make this journey together. Anything else for the good of the order before we head out back to our day? All right. Thank you again, Jeff. I appreciate you being here and taking the time. Thank you guys, everybody, for being here. Have a good one.
Thank you. Thank you
Thank
for the
you.
opportunity. Bye.